Happy Friday, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on the 26th of July, 2019. This is episode number 1564. Welcome aboard. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm going to spend 1 minute going over my background real quick, just as a refresher. My background is actually in engineering. I switched to trading in 2000, in the year 2000, and started out as an equities scalper, a SOS bandit. I switched to futures in 2002, late 2002, early 2003. I was profitable in equities for a brief period of time before 9/11, and then switched to futures, and it took me about 6, 7 months to become profitable. I always traded and came up through a prop environment, which is very different than we're all experiencing today as individual traders online. I've been trading. I was trading as a prop trader for about a year, made money, and then went off and built my own prop shop. And since about 2010, I've been pushing online to bring something different to the retail trader, to the online trader, that would help make the process more as realistic as possible. I'm a member of the CME group. I'm a licensed Eurex trader. The products I focus on now, I trade less Eurex than I have. I actually, my futures career is Eurex based when I started, but I trade more CME Nasdaq crude. Currently, not so much Nasdaq, but I focus on CME ES and crude currently, with sometimes dabbling in various other products, including micro gold and stuff. I've been watching micro gold quite a bit lately. It's a big mover. So that's the background. Today, again, happy Friday. Today, the market's starting out with this key figure, GDP. U.S. economic growth seen slowing in second quarter. The U.S. economy likely grew at its slowest pace in more than 2 years in the second quarter, as an acceleration in consumer spending was probably offset by weak exports and business investment. Also, Twitter beats revenues, and Alphabet's revenue rebounds, easing doubts on growth. Australia is establishing an office that is dedicated to ensuring to the protection of privacy for its users, its citizens users of Facebook and Google. Very interesting, first of its kind. In terms of other events or other key pieces, there really isn't all that much. It is a summer Friday. The 10-year Treasury yield is hovering around 2.07%. The European indices traded mostly higher after a mixed session in Asia, and higher U.S. futures as earnings continue to take center stage. Gold and oil are higher this morning. In news, I'm not really seeing too much to discuss here. Of course, we did get again, as I said, GDP. It came in. The previous was at 3.1% Q on Q. The current's 2.1% for Q2, and that's where we're getting this idea of a slowdown. In terms of the markets. In terms of the markets this morning, we have somewhat of a slight risk-on sentiment coming in. Crude trading around 56.42. Pretty important area here. Gold is up $6.20, $1,420.80, up 0.43%. The Nasdaq follows, up 25 points or 0.32%. Everything trickles down behind it. The Bund is up, interestingly, 20 ticks from yesterday's settlement. The bonds are up 4 ticks. The 10-year note is down 2 ticks in the futures. The cable and the euro are the cable euro and the treasury note are the laggards this morning, or the losers this morning versus yesterday's settlement. So overall, it seems like the sentiment is slightly risk on or bullish this morning coming into the session. Let's take a look at what's ahead. The calendar's free and clear for the rest of the session. As I said, it is a lazy summer Friday. Really important to take that into account and to take that into account and to just chill and be very, very patient and selective with your trades. Let's review what we looked at yesterday. Yesterday, the primary scenario, we were at the time of the at the time of our trader bite yesterday, we were trading at about 30.1950. The expectation is that we were likely to drift lower and bounce back up, take out the high, and come back into the range. That's the main scenario. The secondary scenario, and these scenarios looking to the break to the high side for one reason, and that is the fact that we closed pretty strong the day before with a weak high into new all-time highs. So the expectation is for a higher high on the session. It's completely wrong. Um, as the session came to an open, the market dropped about 2 points, and it just had no buyers in it. We ended up getting an opening print at 3017 and pushing 3 ticks up to 3017.75. We did not close the gap above the prior close, did not touch the prior close. We had sellers coming in. Now, the expectation was for sellers to come in and pull us back into the 3014 area, but I've got to be the first to admit that it just did not behave at all as expected. It just it kind of chopped its way down, um, got into the prior point of control, as I talked about yesterday, the day before that. 3004 is key. We get a very, very clean, clear bounce off of 3004 into the mid right here after the biggest rotation down for the session. Impulse down right there. We get a pullback into the mid, and it provides a scale out, but then we get this impulse up. So now we're looking, okay, this may be done on the downside. It hit a key area, 3004. So now it might push up, pull back, consolidate, and take out the IB high. That's the expectation. So it sits here and flutters around, it was just very, very odd behavior to me, the way it was trading on the footprint or on the volume scope in this area. It just looked like a massive battle to really wrangle control in this zone between 3013, 3012 to 3016. And to me, it was a high probability bet for a long breakout, for this to be a flag, long breakout, take out the open, take out the IB high, and extend into the prior day's close at 30.2150 and potentially new all-time highs as we take out the weak high at 30.22 from the prior session. Look at how weak this high is. How many times did we tap this piece of glass and crack it? And so this looked to me like a high probability push to resolve this way. And then it just kind of sold off. So right then and there, it became clear to me that my read was not as clean was not in alignment with the market. And it looked like many longs as this happened here, as this move right here happened, it became really obvious from the tape that many others were expecting this to break higher as well. There was quite a bit of selling. It looked like a stop run as it pushed through the mid again. For me, it was hands off. My read was clearly not clean. And then what we did is we hit double the IB low. So that's a statistic. Double IB low has an 83% probability, historical probability, somewhere around that figure, 83 or so. Again, past performance is not necessarily indicative of future results, but it has an approximately 83% historical probability that it'll break, that it has broken by the end of the session, and the stat plays out, and we end up pushing to below the prior day's close. So instead of an open that tests down, pushes higher, it's the complete opposite. It was an open that could not get any bids going. Buyers could not hold prices. They had a very strong opportunity here, and we ended up taking out the low instead of the high. And the low the prior day really was thin and behaved like an excess low. So this was surprising action. So what does this lead us into here? Given the idea, again, this is the Monty Hall problem, okay? Um, Given the multiple indications, contextual indications that this is likely to push through the high, and given that it failed to do so in what is traditionally a pretty high probability setup here, push, pull, impulse, consolidate, the expectation is continuation. And that didn't work out. We ended up taking the low instead. To me, this says it is very, very likely today to be in balance. I'm expecting a fairly lazy trade today coming into the session. So that's yesterday, and yes, none of my scenarios really played out properly, completely off, which is a clue in and of itself. The overnight session was spent almost entirely above yesterday's close, and so the inventory is mostly long this morning. The delta is positive on the overnight session. We have pushed 3017 and a quarter. The GDP figure didn't really move us at all, and we are maintaining above mid, above VWAP, and currently above VPOC on a P-shaped profile. So this profile here looks P-shaped. It has quickly moved away, right? So we had this kind of, gosh, I cannot draw a straight line. We had this trend from the open, and then we had this sideways action here, and then we broke higher, and now we're pulling back, and what we have is a P-shaped profile where the market has relatively swiftly rejected lower prices and drifted up to find balance in the upper distribution. If we hold the mid here, the expectation is it's likely to push above. Now it's 2 ticks. The overnight high is 2 ticks below the prior day's high, the prior session's high. There's a little bit more room for this to push to the upside, but I'm going to tell you that this looks or is shaping up to be a very lazy session. And I'm traveling today, so I won't be trading, but I'm really happy that I'm not going to be missing anything major there. Sorry. So let's take a look at what we're expecting for today. And those of you who have been listening for the last, I don't know how many years, so we're it's a lot of episodes. Also know that we're not going to get into the scenarios before I shamelessly ask you to hit the like button today. Please, it is Like Friday. Take a moment to hit the like button. Find it on YouTube. If you're on Periscope, don't worry about it. But if you're on YouTube, please hit the thumbs up button. It makes the channel easier to find. So what are we expecting for today? Again, I've pretty much told you what I'm thinking. The expectation, yeah, I'm traveling. And by the way, this is for those of you who've known me on Twitter and so on for the last 10 years. It's been like this constant indicator that the day I'm missing or when I'm gone is just a huge day. Like the China PMI miss from 2000, what is it, 16 or 15, huge day, like 80-point day was the day I was traveling. The other day I was traveling somewhere and we had a big move. It's just, I could see that we're pushing into a pretty tight day, but I am traveling, and that may be an overriding indicator because the probability on a good trading day while I'm traveling is historically probably 95%. I'm just kidding. Um, so what am I expecting here? We are holding this area here, this 3013, really important. If you look back, 3013, 3010, 3010, 3013. This test yesterday, 3013. This kind of fat zone between 3010 and 3013 it merits some attention, and this is why it's got a stock zone in it right there. Um, the expectation is for an open auction. We are opening in range out of value. The value yesterday is valid. I'm expecting a test of this value, an impulse up, hold back to the open, and squeeze a little bit higher. We still have the weak high from the prior day. Although I'm expecting this to grind up, it may touch or take out that 3022 at some point in the session. My primary scenario is bullish this morning. It doesn't mean that I'll bang away on the buy side and blindly just do it. It just means that as the market moves down, I'm going to look for indications through the order flow or whatever that the market is supporting a push down and is providing support to give me an opportunity for a long. We are gapping up after all. The secondary scenario is an open auction that drifts up into 3017, tests that area, comes back in, gets into 3013, 3010, and holds steady on a tight range for the session. There's nothing expected on the weekend. It is Friday, as I said, and it's just likely to just not go anywhere. The potential for scenario 2 is to actually fall into this POC, but in either case, I'm going to be looking early. If the market tests that high early, I'm going to be looking for opportunities to sell in the 17, 18 areas after the test is done for a reversion back to 13 for about 5 points. We'll see how that works out. Okay, so I'll leave you with that. Good luck today. Oh, one more thing. I've been neglecting to show the full depth, so let me show you that. This is CT Bookmap. You can find it at ctbookmap.pro. I think you can get a 14-day risk-free trial on it. It just shows the depth. There's quite a bit of size, a fair amount of size, relatively more size in the 30-20 area and the 30-24-25. Underneath, I'm not seeing steady size there, 3008 to 3010 maybe, but overall the book is really thin all the way down into 9350. Really not seeing anything, any clues with looking at the full depth of market here. So just be careful today. It's likely to push people into some impulsive trades. Good luck.